Hey, in this video, I'm going to talk about the gift tax on the 529 plan. A 529 plan basically is a college saving plan. Usually parents open a 529 plan to make a contribution each year for the beneficiary of their kids. So when the parents put money in the account, the money is considered a gift from the parents to the child. So if it's a gift, then the gift tax may apply. Gift tax is very different from the income tax. So here I'm only talk about the federal gift tax. When you search the 529 plan gift tax, you usually get an answer saying to avoid a gift tax, you only allow to contribute a maximum $15,000 per year in 2021. You can see here and here. Let's go to IRS website, find out if it's true. We type 709 here. Then you can go here. Then you will get a 709 form. It's a gift form, but we want the instruction rather than the form. So here has a detailed information. In this What's New section, they says the annual gift exclusion for 2021 is $15,000. However, there was a called applicable exclusion amount is 11.7 million in 2021. This is also called a life exemption amount. What does this mean that the annual gift exclusion is $15,000? Then the lifetime gift tax exemption is 11.7 million. So let's see an example. Say in 2021, Nancy opened a 529 plan for her 3-year-old son, and she deposited $100,000 in the account, assuming Nancy has never gifted anything to anyone before. So this $100,000 she put in the 529 plan is only one gift she made. So okay, you can see $100,000 is more than $15,000, right? So you have access to $85,000. So in this situation, so basically say the annual exclusion, the IRS said if you make anything below $15,000, so this won't be subject to any gift tax implications. So anything below $15,000 is not a gift. So you do not need to do anything. So what if you make more than $15,000? So in this case, IRS said, well, you just have to file the gift form, which is 709. Then to report the excess amount. So in this situation, she made an excess amount is $85,000. So you just need to file the form 709 with IRS to report the $85,000. What does this $85,000 report mean? IRS basically said, well, you allow in 2021 your life exemption amount is 11.7 million. Say if before you made a $10 million gift to anybody, so you may only left is 1.7 million. However, Nancy didn't make any gift before. She has entire 11.7 million left. So she now make a $85,000 gift. So this will reduce the 11.7 amount for her lifetime, right? So basically, she does not owe any gift tax. She just need to file the form to tell IRS that, hey, this $85,000 is gonna be counted towards my 11.7 million life exemption. So you can see she still has 11.615 million because 11.7 million minus $85,000 is 11.615 million. So basically you can see, and when you make a more than $15,000 contribution to the 529 plan, it's okay. You do not owe any taxes. You just have to file the 709 form to report to IRS, say you make anything more than $15,000. So that's it. So don't think $15,000 is all you can do. Then don't get panic. Say, oh, if I make more than $15,000, so I will be subject to gift tax. No, you don't, unless you are super, super wealthy. If you are not that wealthy, you not give that much money away, so you are okay. So, yeah, here I just want to, explain that do not panic when you make more than $15,000 per year, then, into the 529 plan. So frankly, you can make $100,000 or, $200,000. Of course, so some 529 plan, they do have a, limit, the balance, how much balance you can have in the account. So you watch out for that balance rather than, gift tax. For gift tax, you really have nothing to worry about for most people, unless you are very wealthy. When you talk about the gift tax on the 529 plan, there's another thing called the 5-year election. What does this mean? Here you can see it's on the form 709. This is on the page 7 at the bottom here. So basically say when you make a contribution more than $15,000, so then you can use the next 4 years annual exclusion, which is $15,000 each year. So let's see how this works. Actually, from the previous example, we can see here IS have an example, the same one as well. Say in 2021, so this person, let's say original Nancy, contribute $100,000 to the 529 plan. 529 plan also on IRS, they called the qualified tuition plan. So it's a QTP. QTP is 529 plan. So that is the same thing for the benefit of her son. So if Nancy elects to treat the $75,000 as a contribute as have been made over the 5-year period. So basically just to say, well, Nancy gonna put $100,000 in it, in 2021. For the next 5 years, she won't put any money in it. So in that situation, she can use the next 5 years, the annual exclusion, actually next 4 years. And so you can see 5 times 15,000 will give you 75,000. So you can see you can allocate $75,000 to use up the 5-year each year's annual exclusion. You will say $100,000 is more than $75,000. Is $25,000 more, right? IS tell you that the $25,000 for the first year you have to, file the 709 form to elect you. First, you elect the $75,000 5-year election. Then you have to report the $25,000 excess amount gonna count towards your life exemption. So that's just something for you to utilize all the annual exclusion. So I mean, this is not really concerned for most people. So, however, for some wealthy people, they've been give money away. They really worry about this, gift tax. So they may choose to do this, 5-year election. For most people, you want to do it, it's fine. I mean, you don't want to do it, it's fine too. So it's not really gonna affect you that much. Okay, let's go on some other website to confirm this information. You can see here is Investopedia. You can see the life gift exemption amount is you can see the annual $15,000, then you have $11.7 million here, then you have a super funding 5 years. This is another website, Saving for College. You can find their information regarding annual gift exclusion, lifetime exemption, and the 5-year election. You can read about it yourself.